Good morning, good afternoon, good evening. Welcome to today's grain market blast, the grain blast. Yes, it's already Monday. Blink and you missed it if you were working over or if you were over the weekend enjoying yourself. As usual, the glamorous, the gorgeous, the goddess of grain herself, Angie, will be giving us a roundup of the latest pricing flows and market moving news in grain markets. But before she does, I'll get the legals out of the way. Nothing discussed on this podcast is trading or investment advice. We are not endorsed by anyone. Do your own due diligence, etc., etc. I'm also now hoping that, bearing in mind the clock's changed in the UK, I've not scared Angie by doing this 2 hours early, and in fact, it is on time. And
we are on time.
Yes, thank God for that, because that minute of waiting for you to join was the longest minute of my life.
Right. Well, this Podbean, when you started it, for some reason, Podbean decided that it needed to verify whether or not I was human. Oh. And I was like, girl, I feel that. It is Monday. I am no human.
I'm certainly not a robot, but am I human?
Right? That's it. I am quite human over here. I do have feelings and emotion, and they are hurt right now because you don't think I'm human. But anyway, welcome. Happy Monday.
I think we've got to start the show by patting ourselves on the back. Because on Friday, exactly, that's why we've got to make the most of it. On Friday, we sat there, and although we did say we probably massively jinxed it, we said our base case is for very positive news to come out of the weekend with the headlines from Bezant and etc. And not only was it very good, I think to be honest, I was expecting good news. I didn't expect to be this clear cut good news. And I think, as Michael said this morning, Michael Brown on the Morning Blast, I think the key thing here was that China's take on what happened was almost a copy and paste of what the US administration's take on what happened. And normally that's been the only bit that's kind of been a bit niggly in the past, is the fact that the two didn't really line up. But this time, both China and the US appears to be on exactly the same page for now, and risk on.
Yes. Well, and I think, it's like we had talked about ahead of the weekend, like both parties had basically escalated it to the point of where it was like, okay, this is, we're going to have a head-on collision here.
Yeah.
And the only people that are going to end up hurt are ourselves. And hey, I'm willing to do it if you want me to. Don't make me turn this car around, was kind of both.
Yes.
We're kind of like, dear God, please be willing to like come up with a, and so they did. And we'll see. I am, obviously it is important. This market has been kind of functioning on the idea that China purchases were going to be basically zero. I have been very loudly arguing that is virtually impossible for them unless we had a complete dissolving of everything.
Yeah.
You know what I mean? Like, unless there was something weird with Taiwan or something, which, hell, who knows at this point? It's 2025 and I'm not going to speak too boldly about anything. But, to see a bit of a de-escalation, to see them say, to see Bezant say, not only is he a bit of a soybean farmer himself, he's been struggling, poor guy. He wants to raise that rent on his tenants and can't because basis is so high.
Yeah.
You got to feel for him. But it's just going to be one of those things where, and I put together 3 different sort of sets of analysis ahead of the weekend last week and kind of was like, okay, bearish outlook, right? Yield stays at 52 bushel to the acre, which I think we're going to be hard pressed to see happen with how the cash market has acted, to a certain extent. And China doesn't show up for anything. We have to take 300 million bushels off, obviously. The rest of the world's going to come in or whatever. Like the most bearish outlook in soybeans was, 470 to 500 million bushels of carryout, which is negative, which is, $9 beans or whatever. But that's on the back of zero purchases by China. If we come in, and yield is just in line with last year, 50.7 or even around that 51 bushel to the acre mark, and China decides to buy what they bought a year ago. Not even, we don't need the purchases to be substantial. We just need them to come in by 22, 23 million metric tons. It is not hard in soybeans to get to where you're rationing demand. And the thing in soybeans about rationing demand now is that we have a huge amount of domestic crush demand that is being supported by renewable volume obligations and increased biodiesel blending and all of these other things, biodiesel and renewable diesel production around the world. This whole idea that soybeans had to go to zero, is not only wrong right now. There's a real risk that it could be the exact opposite, depending on the deal that's put together, with the administration. And I hope that, I said to someone earlier today, like, I hope it's not more than 20 million metric ton of soybean purchases, because I prefer a nice, balanced, efficient, kind of calm sort of market. But we'll see. We'll see how big the splash is. If I were China at this point, I'd be like, you guys have thrown such a huge fit about it. I'm buying 35 million metric tons from you. Like, figure it out.
Yeah, right. You asked us to buy, now we're buying.
Yeah. And so but we'll see. Obviously South American weather is going to have a huge influence on this and stuff like that. But you did see like Bloomberg over the weekend come out and say that they're covered through the end of the year and into the start of next year. I don't know who they're talking to on that. That's not true. That's not accurate. Basically, between now and the end of the year, they've got about 8 million metric ton of ownership to buy. You get out to about 10 million, 10 to 12 million, give or take, as we work our way to the end of January. The American Soybean Association says they have 20 million to cover, but the American Soybean Association is in a timeout. So we're going to take that with a grain of salt after their stunt ahead of the harvest where, bottom was falling out and all these other things. So, from an overall standpoint, though, you basically have taken the biggest sort of bearish input, out of this market, and it's, the market is reacting accordingly. We're up above what would be a very important technical resistance level. And if we close up here, then we're going to test 1080. If we close up there, then you're going to be above, trade the $11 mark. And if you look at any chart in soybeans whatsoever, there's very few times that we spend a lot of time with an $11 handle. And so, giddy up, it could get quite spicy here as we move ahead. Anything that you want to throw out there on the China?
No, I think it's all been, I think you've covered everything I was going to look at, but also kind of bearing in mind that this is China, US. I don't want to kind of dwell too much until we get a bit more follow through. I think we could see, obviously, we got this initial kind of pop higher. I wouldn't be surprised if the markets now want to kind of wait for the President Xi meeting before kind of taking the next leg up. Of course, I might be wrong, because I do always believe like the path of least resistance, especially at the moment, is higher. But I would kind of, I wouldn't damn the market too much if we did want to trade sideways and consolidate this new kind of reach higher ahead of the President Xi meeting. Because obviously, again, anything could happen, right? Let's be honest. My base case is, again, for more positive talks and another leg higher. But I just don't, I wouldn't mind if we went sideways until President Trump and Xi meet face to face.
Yes, it'll definitely be something that we'll be watching. I think you'll see this sort of leg where we maintain the support. And then the nice part about commodities, grains in general, is that there is not a soybean merchandiser out there who doesn't work for COFCO. Like, call a spade a spade. Like, COFCO US is very much like, we ain't telling nobody nothing. But if you got a guy that works for like Dreyfus or whatever, he loves to share with his friends the trades that he's putting on. And so we will know far before anyone else, and we don't need the USDA to confirm. You're going to see it in spreads, you're going to see it in basis, and you're going to see it in everyone talking to one another. Because we love to share, all of that. Like, that's it. Last week, it took all of 10 minutes, it felt like, of China shopping for white wheat out of the PNW before I had folks in my DMs. And I'm not complaining. Please tell me all of your stories and things that they're looking for, and let me know. But, we're going to know very, very quickly ahead of Thursday whether there's goodwill purchases made. And so, like I said, hold on to your butts. Like, China has a corn problem. China's got the flooding. They've got the quality. They've got all of these issues in corn quality. We have a corn quality problem in the EU. I'm kind of transitioning over into just global corn things that I'm watching. We've got the Black Sea issue, and so too, over the weekend, obviously, you saw some more Russian escalation, and all of these other things. And so when it comes down to it, like, China's going to be the tail that wags the dog overly, for the most part. But we also have really strong fundamentals underlying that if they get really crazy with the cheese whiz, this is what, like, if we come in and they start to buy, if they want to buy 25 million metric tons of corn again, I'm not saying they will, but if we're kind of pushing these, make up the difference between phase one and where you're at, and it fits for them, like, remember, they've been using their reserves. They've been using, a lot of these bushels. There's a way that they've been able to kind of keep themselves from buying U.S. grain. And yes, they've had more come in from South America and things like that. But you also have to remember, Argentina is now beholden to the Trump administration to a certain extent. You know what I mean? Like, you had the Argentina election win. You had Milei come in. The support from Trump. Now, we could argue whether it helped or whatever, but Trump's going to say it did. And so the other thing that you're going to see is now that Milei won, you're probably going to see some calming, some more, positive fiscal outlook in Argentina because it was a pretty decisive win. And that's going to keep the farmer from being an aggressive seller as well. Really, they're probably going to hold on to their supplies until that export tax is removed again. And at this point, do you think the Trump administration is going to let the Milei administration remove an export tax anytime soon after the last experience, just 3 weeks ago or whatever? And so the election win also is something that is important to pay attention to because it kind of gives the farmers more ammunition to hold grain out of the pipeline. Because, Milei and his getting that support and all of these things.
And also, this thing, is he's done incredibly well during his midterms. Milei, obviously, I'm talking about, and this will be the Trump administration. There'll be a significant sigh of relief in the Trump administration on the back of this, which I do believe then it does then kind of allow them to be a bit freer, a bit loosey goosey with trade talks such as with China. And obviously, we've also had some positive news with other Asian parties out there on the rare earths as well. So it's been a very good weekend for the Trump administration, in my opinion.
You've got the Brazil deal too.
Yeah.
You know what I mean?
Oh yeah, of course.
The Trump administration obviously angling as well. I think that's part of the tools that they've been using with China. And remember, these are our competitors. Brazil and Argentina are our competitors, but the enemy of my enemy is my friend. And so what is there in there too, where it's like, okay, well, if you guys start playing these or you start doing this or whatever. But you also saw Lula last week and out of Brazil, speaking of Brazil, say that he was ready to quadruple the nation's biofuel outlook, biofuel mandate. Now, remember, they're E30, 30% ethanol, and B15, 15% biofuel or biodiesel, renewable diesel in their mix as well. And so, one of the things the Trump administration could easily say, and it wouldn't look the least bit like they were trying to host China, would be, well, it'd be a shame if you doubled your domestic demand or significantly increased your domestic demand and kind of removed your attention from being a competitive exporter. Like we act like they're just always going to produce bushels to puke them into the world market.
Right.
And that's not the case with Brazil either. You've got 30 million metric ton of corn ethanol demand that's going to be coming online in a couple of years and, some of these other things. And so, I don't know. It's all a butterfly effect. It's all, we already used the phrase, but tails wagging dogs and stuff like that. And so it's going to be fun to watch. The biggest thing will be cash though, and basis continues to firm. You're seeing the rail market continue to firm. You're continuing to hear stories across the countryside of there's piles in places like South Dakota, my growers in central South Dakota, their local elevator is piling grain wherever they can put it. And that's not the worst thing. If you pick up carry, you put it in a pile for a month and you make money doing it. And you are able to facilitate harvest for your elevator customers, but then about 90 miles north, I have another group of farmers that I work with that we're getting push on basis because they aren't buying what they thought they would be. You got stories of elevators in Iowa that didn't fill up at harvest time. That should never happen.
Right.
Then shutting down. If you're an elevator manager in Iowa right now, like this needs to be scarlet letter style punishment. Like, honestly, like I mean it too, and so that's the other thing, like this talk of increased on-farm storage. The easiest way to kind of pass off the, oops, I missed my target origination level, is to simply say, well, the farmer's holding more. And it's,
there you go, easy.
Price rally. Yeah. I mean, that's a good argument. We should see aggressive selling. If the farmer is holding more, the farmer should be an aggressive seller at 1094 soybeans on the March board, because that's going to be 1075 or better cash in most of the country, except for the Dakotas. I'm sorry, guys. But yeah, I mean, it's going to be a good day. We've got a lot of things happening. You've got a huge issue developing in the Black Sea, logistically speaking. Like we're finally starting to see more people chime in on the, wait a minute, Russia is not competing in any of these wheat tenders because they don't have the logistical capabilities to move the wheat to port. That could be problematic.
Right.
Is one thing that we're seeing. Obviously, there's a story. Egypt is having some issues with not being able to pay for their boats, so I need to dig into that a little bit. But yeah, from an overall cash market standpoint, EHA giddy up. Don't be surprised if you don't see some pressure throughout the day because of, we should see some increased farmer selling. But the biggest, most negative bearish inputs have basically been driven past, and we're looking to, now an end user trying to secure bushels that they're finding are a hell of a lot harder to get a hold of than they thought.
Awesome.
So I think
brilliant. Well, Angie, thank you so much. I forgot to ask, but I do hope you had a great weekend.
Oh, of course. Yeah, I had a really good weekend. It went by way too quick, but it was good.
Brilliant. Well, that pleases me no end. And listeners, obviously, same goes for you guys. I hope you've had a great weekend as well. And for those of you that are finishing up with harvest, etc., I hope it's going well. Stay safe, keep it tight, and we'll see you all tomorrow. Much love.
Have a good one, guys.